Welcome to a quick 3-minute fundamental analysis of C3.AI on July 12, 2021. I'm not a financial advisor, so please do your own due diligence. Now let's get into the fundamental analysis. So I did a DCF of this stock and I came up with a price range of between $104 a share and $161 a share. And the main factors affecting the DCF are the growth rate and earnings. So I assumed the revenue growth rate was at 34% a year based on the company's full year fiscal 2022 guidance, as shown in the right here from the press release for the fourth quarter 2021. So anyway, they had forecast the full year 2022 revenue of $245 million. So I plugged this number into my DCF. Also, the other reason that there's such a range from $104 to $161 for the price is because it's difficult to determine the beta, because the company has just IPO'd just a few months ago, and also the 10-year bond yield is currently on a decline, so it's difficult to forecast the bond yield, which also affects the DCF. Now, I should also note that this analysis of $104 to $161 a share is conservative, because the company has before actually grown revenue by 71% a year from 2019 to 2020. So I've only assumed that it grows the revenue this year by 34%. Now, I also did a valuation using multiples, and I came out with $144 a share valuation. So for the multiple valuation, I assume the same 34% growth rate, and I used the enterprise value to sales ratio to calculate it, and also the price to sales ratio, and depending on the forecasting the debt of the company. So the company, as you know, it has a lot of cash, over $1 billion cash, and virtually no debt too, which helps elevate the price to sales ratio. So the bottom line is that I believe that the company is significantly undervalued. The stock is currently trading around $58, and my valuation of around 104 to 161 is somewhere around the line of what some of the analysts have forecasted. If you look at the analyst estimates, somewhere around 145, somewhere around 100. There's some that are as low as 60 that the other analysts have forecasted, but it actually came up in my DCF as one of the scenarios, but it's a very bearish scenario that you'd have to assume that the company's not growing the revenue by much, and not or that the government is going to raise the interest rates a lot, to which will increase the borrowing cost, or the cost of capital for the company. So anyway, that's the DCF for today, and I'm going to put out some more videos on analyzing the different financial statements. So that's for now, and have a good day.